Welcome to The Explainer. Today, we're diving into a literal seismic shift in the retail landscape. Honestly, it officially marks the end of an era. For over a decade, walking into a US Walmart meant pulling out a physical card, fumbling for that chip insert, or if you really had to, using their proprietary app. But on August 24, 2026, the final major holdout finally crumbled. Walmart and Sam's Club officially flipped the switch and embraced Tap to Pay.
Now, what's really fascinating here is the mystery of why they caved and why right now, right? This wasn't some quiet, slow tech upgrade in the background. It is an aggressive, phased rollout aimed at equipping every single US store by the end of 2026, with gas stations following in 2027. So what on earth forced the world's biggest retailer to completely reverse its stance and just hand the checkout experience over to Apple, Google, and Samsung?
Well, let's start with part 1, the 12-year payment war.
This whole clash really boils down to two entirely different sets of desires. On one side, you have Walmart. They wanted to avoid those high transaction fees that come with processing credit cards through tech giants. But even more than that, Walmart is practically a massive data company that just happens to sell groceries. They wanted to hoard your shopping data. On the flip side, you have the consumer, you and me. We didn't care about their data strategy, did we? We just wanted the ultimate convenience and literally the fastest checkout possible.
So, the real crux of the issue here is a technology called tokenization. When you use Apple Pay or Google Pay, the transaction gets tokenized. Basically, the bank knows who you are, but the retailer? They just get a masked token. This effectively hid your precious shopping data from Walmart. And because they absolutely could not stand losing that visibility, they spent years pushing failed proprietary apps. Remember Currency? Oh, man. Or what about Walmart Pay, which forced you into scanning these clunky QR codes just to keep you trapped in their ecosystem? They literally invested millions just to avoid putting standard NFC chips in their registers.
But as Walmart kept digging their heels in, the rest of the retail world just moved on. Apple Pay launched way back in 2014, and pretty soon, the other major holdouts adapted. Costco started accepting NFC in 2018, Target followed in 2019, along with Home Depot, Kroger, you name it. Every other major competitor adapted to what consumers actually wanted, leaving Walmart stranded as the sole stubborn retail island. And, in retail, being the sole exception isn't a badge of honor. It just creates massive friction for your shoppers.
Which brings us to part 2, the rise of contactless. By the time Walmart finally threw in the towel in August 2026, an overwhelming 85% of US retailers were already accepting Tap to Pay. The infrastructure was everywhere. We'd grown entirely used to just leaving our physical wallets in the car and walking into a store with nothing but a phone or a smartwatch.
The encroaching tide of consumer behavior was just undeniable. Think about this. In 2024, the share of Americans tapping their phones at the register was around 14%. But in just one single year by 2025, it more than doubled to 31%. You simply can't fight a trend that is doubling year over year like that.
And that brings us to a frankly incredible milestone. Digital wallets are now running neck and neck with cold hard cash, making up roughly 12% of all in-store transactions. Just pause and think about that for a second. Tapping a phone is now exactly as common as handing a cashier physical paper money.
Furthermore, with over 65% of all in-person card swipes in the US now being contactless, the war was effectively over. It became painfully, glaringly clear that the consumer Goliath had won. Shoppers had made their choice on exactly how they wanted to pay, and Walmart was just the last giant standing in their way.
Let's look at part 3, the financial breaking point.
Walmart didn't just give up out of the goodness of their hearts. Just days before this rollout was announced, they were staring down some terrifying market metrics. Their stock had hit a 9-month low. They experienced their worst single-day drop since 2023. Spring earnings reports were weak, and they totally missed Wall Street's expectations for same-store sales growth. When a company is bleeding investor confidence like that, the friction of a slow, annoying checkout process stops being a quirk and becomes a massive liability. If a customer is choosing a competitor down the street just to use a faster one-tap payment, you are actively driving your own foot traffic away.
So, to stop the bleeding, a compromise had to be made. They had to trade data for customer satisfaction. Industry analysts point out that Walmart most likely leveraged their massive billion transaction volume to go back to the negotiating table with Visa and MasterCard. By securing lower transaction costs, they made the economics of Tap to Pay palatable. They deliberately chose to protect their market share and sales volume, even if it meant finally sacrificing that precious individual consumer data they fought for 12 years to keep.
Okay, let's wrap up with part 4, the future of checkout. Now, this is where it gets really fascinating. Enter agentic commerce. It's a wild concept, but this is a future AI frontier where you won't even actively pay for things anymore. A digital agent on your smartphone will negotiate and pay on your behalf, maybe dynamically choosing whichever card offers the best rewards at that exact microsecond. But for an AI to actually do that, it strictly requires an open payment infrastructure. So, by officially accepting open standard NFC tech right now, Walmart is secretly future-proofing their checkout lanes for the 2030 agentic economy. They are literally staging their stores for a world where an AI is the one doing the topping.
Ultimately, this move has a massive ripple effect across the entire payment landscape. Big box retail has always been the gold standard for mainstream payment adoption, right? This massive rollout across thousands of Walmart locations normalizes digital wallets for the very last remaining demographic of older chip-and-pin shoppers. These are the consumers who only saw Walmart in a totally traditional light, and now they're going to be introduced to the frictionless world of tapping to pay.
So after a 12-year battle, consumer convenience definitively took the crown. As we wrap up this explainer, I really want to leave you with a question about your own daily habits. Will you be tapping your phone the next time you make a Walmart run, or are you stubbornly sticking to plastic? It's a whole new checkout experience waiting for you. Thanks for exploring this with me, and definitely keep your eyes on how this shift continues to change the way we all shop.